Hey there, and welcome. Today, we're going to tackle a problem that I know drives a lot of traders crazy. How do you get clear signals in a market that's just full of noise? Well, we're going to break down a really practical intraday strategy that uses a few powerful tools together to filter out all those false moves. Let's get right into it.
You know the feeling, right? The market fakes you out. What looked like a perfect signal suddenly reverses, and you're left scratching your head. Sound familiar? Of course it does. The strategy we're breaking down today is designed to bring some serious structure, a filter-based approach to help you cut through all that chaos. So, what's the big idea here? It's actually really simple, but incredibly powerful. Don't ever rely on just one indicator. Instead, we're going to combine several indicators, and we'll use each one like a specific filter. Think of it like a multi-layered confirmation system, all designed to weed out those frustrating false signals.
So what are the tools in our toolbox for this strategy? We've got 4 key players. First up, 2 moving averages. They're our trend spotters. Then we bring in the relative strength index, or RSI. Think of this as our strength meter. And finally, we've got the MACD, which is going to confirm if there's real momentum, real gas in the tank behind the move. Each one has a very specific job to do.
Okay, let's roll up our sleeves and get to the first practical step, the setup. You wouldn't build a house on a shaky foundation, right? Well, the same thing goes for a trading strategy. So, let's walk through exactly how you need to get your charts configured.
The heart of this setup is a 2-chart system. You'll have your main 5-minute chart, that's your action chart, where you'll be looking for signals. But, and this is so important, you'll also have a 15-minute chart open. Its only job is to tell you the direction of the bigger overall trend. It's our first major filter. And don't worry about the indicator settings you see here. They're all totally standard, nothing exotic.
And this right here, this is probably the golden rule of the entire system. Before you even think about placing a trade on your 5-minute chart, you have to glance over at that 15-minute chart. If that higher time frame is bullish, you are only looking for long trades. If it's bearish, you're only looking for short trades. That's it. This one filter alone can save you so much grief from fighting the market's main current.
Okay, so our charts are set up. We know which way the wind is blowing thanks to our 15-minute chart. Now for the fun part. Let's dig into the specific, multi-part signal that tells us when it's actually time to pull the trigger and enter a trade. The logic here is less about one aha moment and more like a pilot's pre-flight checklist. We're not just looking for one thing to happen. Nope. We need 3 distinct conditions representing trend, strength, and momentum to all line up and give us a thumbs up. Only when every single box is checked do we have a signal we can act on. And here's what that checklist looks like in the real world. For a long entry, 3 things have to happen on your 5-minute chart. 1. The fast 5-period moving average has to cross above the 15. 2. The RSI needs to be above 50, showing us the bulls have strength. And 3. The MACD line has to cross above its signal line, confirming that upward momentum. For a short entry, you guessed it, it's the exact mirror opposite for all 3 conditions. So you see how they all build on each other, right? The moving average crossover is your first alert. It's like a knock on the door, signaling a potential change. The RSI then acts as a gatekeeper, confirming if there's enough strength behind that move to even pay attention. And finally, the MACD crossover is your final confirmation, telling you that yes, momentum is really on your side now. Look, finding a great entry signal is awesome, but it's only half the story. Any strategy without a solid plan for managing risk is, well, not a strategy at all. So let's talk about the safety net, the rules for protecting your capital when things don't go your way.
The exit rules are really clear and simple. Your stop loss, your protection, is going to go just below a recent swing low for a long trade or just above a recent swing high for a short. For your profit targets, the idea is to take your first profits at a clear structure level, like a recent high, and then aim for a bigger second target.
And that brings us to this crucial number, 1.5. Before you take any trade, you have to make sure your potential reward is at least 1.5 times bigger than your potential risk. This positive risk-to-reward ratio is a cornerstone of long-term trading because it means your winning trades will be bigger than your losing ones, which is how you stay in the game.
All right, we've covered the setup, the signals, and the risk management. Now let's pull all of that together into one final at-a-glance checklist that you can use as a quick guide right before you take any trade.
And here it is. Before you go long, you need 3 green check marks, MA5 over MA15, RSI over 50, and a bullish MACD cross. Before you go short, you need the 3 opposite checks. If even one box isn't checked, you do nothing.
You sit on your hands and wait. It's a simple mechanical go or no-go system.
Lastly, here are a few crucial tips to help you avoid some common traps. That first 15-20 minutes of the market open, it can be total chaos, so it's often smart to just let things settle. Also, be really careful if a signal appears when the RSI is already screaming overbought or oversold. And if the MACD histogram is just flat and hugging the zero line, that's a huge red flag for weak momentum. And I know I sound like a broken record, but I'll say it again, always check that 15-minute chart first.
You know, this quote from the source material just nails the whole philosophy of this strategy. It's not about finding some magic indicator. It's all about using several logical filters together, as a team, to improve the quality of your signals and seriously reduce those annoying market whipsaws.
So as we wrap this up, the real question to think about is this. Could a structured, checklist-based system like the one we've just gone over bring more discipline and a lot more clarity to your own trading? That's all for this explainer. Thanks for joining us.